All right, getting back into chapter 7. We're going on mileage deduction now. So here we've got automobile expenses, we've got actual expenses. That'd be your depreciation, oil changes. You need to repair your muffler, insurance, license fees, the actual money that you pay to keep your vehicle running. Then we've got the standard mileage. 2022 is 58.5. I want to say 23 is 62.5. Um, Here, this would be the actual miles that you travel multiplied by the per mile rate. Um, it's whether it's better to take actual or standard. Actual generally gets you a little bit better of a deduction. Um, Standard is significantly easier to track. So a lot of people do standard, but actual gets you a generally speaking, I mean, context matters, but if you look at studies, it's going to get you a little bit more. But people generally do standard because it's just easy. Entertainment and club dues. As of 2018, with the TCJA, entertainment expenses are no longer deductible. Um, no deduction allowed for cost to build or maintain entertainment or recreational facilities. No deduction allowed for club dues. Um, Social clubs. A big one is country clubs. I think the code specifically calls out country clubs. But you can deduct dues for professional, civic, and public service organizations, Chamber of Commerce, Rotary clubs, things like that. So entertainment, no. Club dues, um, no. But professional dues, yes. Meals kind of went through some changes during the COVID years, 2020 and 21, where it was allowed 100% deduction. It's typically only 50%. Um, so as you can see here, the 50% limitation has been removed for 21 and 22, supplied by a restaurant. You got to meet the following criteria. It's got to be ordinary and necessary, right? Section 162. Cannot be lavish or extravagant. Taxpayer must be present when the meal is provided. Food is provided to a client or a potential client, and food must be billed separately if it's provided with the entertainment. If it's all grouped into one, it's generally going to be disallowed. Meals purchased while traveling away from home. This gets back to the tax home concept. They're also deductible. If self-employed and the client reimburses for the meal, 100% deductible for the reimbursed person, and reimbursed meals to an employee under an accountable plan are not income to the employee. There would just be a deduction for the business or employer. Business gifts, deductible up to $25 per billingee. Amounts under the 25 are disallowed. That's not subject to the 50% reduction. And employee achievement awards that are under $400 per individual are deductible. Employee business expenses. So we've got accountable and non-accountable. Substantiation, the employee must make adequate accounting to the employer, and the employee must return excess reimbursement. And non-accountable, you've got reimbursement is included in the employee's gross income. The employee doesn't get to deduct those amounts. Accountable plans. Reimbursements are included in gross income and expenses are deductible for AGI. Again, we're getting into the for versus from concept. Can use the per diem allowances for meals and lodging expenses in lieu of actual expenses. Per diem allowances, they vary city to city, state to state. Like I think Duluth actually has one of the higher per diem allowances because people want to travel here in the summer and hotel rates are through the roof. So we have a high per diem rate. Taxpayer need only substantiate the time, place, and business purpose of the trip, know the receipts of the actual cost of the trip. Pretty much in all of these, if you've been paying attention, the IRS is going to want documentation and you got to be able to substantiate these deductions. Requirements for moving expenses. So starting in 2018, again, the TCJA, moving expenses are not deductible to both self-employed individuals and employees. There are exceptions, and that's taxpayers who are actively serving in the armed services. They can deduct moving expenses. Armed services, there's another one, and something like with like the circus. They get generally uh, different rules applied to them than other taxpayers. Exceptions to general rule of non-deductibility of educational expenses, uh, tax credits, student loan interest of 2,500, excludable scholarships, employee educational assistance by employer, limited deduction for higher education, qualified state tuition program, and covered IRAs. Requirements for the deductibility of educational expenses. You have to maintain or improve skills for your trade or business, and the expenditure has to be required by the employer or imposed by law. If you think of it as like a CPA, you have 40 hours of CPE, continuing education you have to take. That would be deductible. It's not deductible if the education meets minimum educational requirements for employment or the education qualifies taxpayer for a new trade or business. There's a pretty famous court case with this, and I can't remember what the individual was originally doing, but they were going to the University of Minnesota to acquire new skills. I think it was a law degree. And they tried to say that, yep, this is a trade or business expense. No, it's not. Your trade or business is something completely unrelated. You don't get to deduct these costs because you're pursuing a new trade or business. The home office expense criteria, got to meet one of the following. Office is used as the principal place of business. Office is located in a separate structure not attached to the dwelling, must be exclusively and regularly used in the trade or business. An office used as a meeting place for patients, clients, or customers. So you can't have an office in your living room and you watch TV there, but also sometimes you work. It's got to be used exclusively for business. That's the rule. Type of home office expenses, you've got direct and indirect. Direct expenses relating only to the office, dedicated fax line, paying in the office, a desk, various expenses like that. Indirect, it would be a pro rata share of the expenses that benefit the entire dwelling. Real estate taxes, insurance, utilities, maintenance, things that you couldn't allocate to just one room. So typically you take the square footage of the office, divide it by the square footage of the total, home abode, and multiply that by your indirect expenses to get your pro rata share. Calculating the home office deduction, home office must be for the convenience of the employer, not the employee. That is a pretty big one. Total home office expenses equals 100% of direct expenses plus your pro rata share. There's a safe harbor. People often take the safe harbor. Instead of deducting direct and indirect, you deduct $5 per square foot for home office expenses. And that's for a max of 300 square feet, which gives you a grand total of 1,500. So that's your deduction. People will often use that. And again, it comes down to a lot of people don't want to substantiate these costs, right? They don't want to go through their utility bills, their phone bills. So they just say, you know what, I'm just going to take the safe harbor election. I'm going to stop that one there for now because now we're getting into deferred compensation plans, which we will continue in the next video.